you've got a buy on this stock, and like many others, you see the price basically doubling to about 231 is where the general price target is for this year in the next 12 months for Tesla, and you have about 220. Can you talk us through the reasoning why you think this is a buy the dip moment?
Yeah, so while Tesla is shifting into a slower growth mode, the growth is still there, and the stock is at a reasonable price right now. You know, a lot of the ancillary businesses like full self-driving and potentially growth of the insurance are being heavily discounted, as well as future cost savings that management can still implement as it ramps up its factories and as it achieves its 2020 battery day goals. That will still drive margins higher. So I expect profit growth in excess of revenue growth, even if revenue growth is more in the high teens over the next 10 years instead of management's 50% target. So we see a lot of upside in the stock at current prices.
Is it then a story of a show me stock? What's interesting is, yes, they did miss their targets, their own internal targets to deliver more than 50% growth in terms of deliveries last quarter, and they missed it. They got in, but 40% is still strong. Do we need to have more clarity, more real sort of basic analysis and future guidance coming from Tesla so we can set our sights a little bit more realistically?
Yeah, I think that certainly would help. Management just saying that we expect to grow 50% a year in deliveries over a multi-year period does not really help with year-to-year guidance, especially as Tesla's now big enough to start seeing a demand impact from an economic slowdown. You know, now that they're at 1.3 million vehicles annually, they're going to start to see some consumers who may want to hold off on that big ticket item and then wait till the next year while we're in a slowdown. So, you know, I think management guidance and the more sort of confidence they can give us around specific targets and numbers from a year-to-year basis would certainly help the stock, because I think investors right now are searching for what is the right growth rate. And with a high growth stock like Tesla, even small changes in a growth rate assumption can materially change your valuation for the stock.
Yeah, I mean, talk to us about the incentives that will be having to be dangled in front of a US buyer. Is that a worry, or is that shining a light on the fact that the price point is going to have to change?
We do think there's going to be some small price cuts, as Tesla's going to want to make sure that as many of its vehicles as possible, specifically some Model 3s and Model Ys, will ultimately qualify for the Inflation Reduction Act tax credit. And heading into an economic slowdown, I think that's going to be a way Tesla can generate strong demand growth. So we are modeling some price decreases for that platform next year, in this year, to help generate demand growth. And then that's going to help Tesla grow to what we're forecasting is a little over 1.6 million deliveries in 2023.
So with all the daily sort of tussles that you get, whether it's on social media or whether it's on air like this, whether it's about the worries of whether 40% is still a pretty good growth rate, whether or not we should be looking at deliveries rather than demand. From your perspective, what is the main thing that we should focus our eyes on now when it comes to Tesla? Is it China? Is it deliveries? Is it demand? Which side should we be looking at?
I think there's two key things that we should continue to focus on. One is, as we go into 2023, what will the growth rate be? You know, I still expect decent double-digit growth. I'm forecasting 24% growth next year in deliveries. And then two, what do the profit metrics look like? If you remember back in the first quarter of last year, Tesla achieved nearly a 30% gross margin in the automotive segment, and that was before the opening of the Berlin and Austin factories. As production ramps up in those factories, I do expect the gross profit margins will improve sequentially. And so if Tesla can continue to show profit improvement, I think that helps give confidence that the stock can still work and still be a growth stock.